All right, welcome to The Explainer. Today, we're diving into something huge for MicroStrategy. You know that one big risk that's been hanging over the stock? Well, it's gone. Let's break down what this actually means for everyone watching this company. So let's just get right to the headline here. A multi-billion-dollar threat that's been looming over MicroStrategy. It's been resolved. And look, this wasn't just some small what-if scenario. This was a very real, very tangible risk of massive forced selling, something the market has been worried about for months. And now, poof, it's off the table. And here it is, the official word right from the horse's mouth, MSCI. They've decided not to exclude companies like MicroStrategy from their indices. And you have to understand, this is a huge deal. We're not just talking about an analyst opinion here. We're talking about the fundamental plumbing of the market. You know, all those giant index funds and ETFs? If this had gone the other way, they would have had no choice. They would have been forced to sell, period. Okay, so why was everyone so on edge about this? To really get it, we need to go back a bit to see how this whole thing started. This wasn't just some tiny tweak to the rules. No, this had the potential to unleash billions, with a B, of dollars in automatic forced selling. So for a few months now, the market has been living with this cloud of uncertainty. It all kicked off back in November when an analyst first flagged this risk. And ever since then, it's just been there, this unresolved question mark quietly weighing on the stock price. Well, as of today, that chapter is officially closed. This whole situation created what Wall Street types call a structural overhang. And it's a great term, actually. Think of it like a dark cloud or a shadow hanging over the stock. And the key thing here is that this shadow had nothing to do with the company's performance, its software business, or even the price of Bitcoin. It was just this weird, mechanical risk of forced selling. And believe me, the market does not like those kinds of risks. Now, this is where it gets really interesting. How did MicroStrategy handle this threat? You might think they launch a big PR campaign or start tweeting about it, right? Nope. They did it the old-fashioned, professional way. They submitted a formal, reasoned argument directly to MSCI, laying out their case point by point. Really, the whole thing came down to one simple question. What is MicroStrategy? Was MSCI going to label them as just an investment vehicle, basically a fund for holding Bitcoin? Or would they see the reality that it's an operating software company that just happens to have a very unique, very forward-thinking strategy for its treasury? And in their official response, they really broke it down. They said, look, we are not an investment fund. We're a software company. They argued that Bitcoin is an asset they use. It's not the product they sell. And they made a great point. If you just want pure Bitcoin exposure, hey, there are spot ETFs for that now. Buying our stock, they said, is about buying into our management team, our unique capital structure, and our ability to execute. And maybe most importantly, they warned that a simple rule would just create chaos for the index, causing these weird cliff effects where companies could get kicked in and out based on volatile asset prices. It was a really smart, well-reasoned case. Okay, so that was the argument. Now let's talk about the market's reaction. Because the way the stock moved tells a fascinating story. And it's all about the difference between two words, relief and euphoria. So the second this news hit the wires, what happened? The stock shot up around 6%. Instantly. And that pop right there tells you exactly how much this overhang was weighing the stock down. It was like watching a giant weight get lifted off its shoulders in real time. But, and this is so important, this was a relief rally, not a euphoria rally. What's the difference? Well, euphoria is when brand new, amazing news comes out and everyone rushes to buy. Relief is different. Relief is when something bad that everyone was worried about doesn't happen. The big threat of forced selling just vanished. And that means the investor base is more stable and people can finally get back to focusing on the actual business. So let's zoom out for a second because this decision is bigger than just MicroStrategy. This is really about how the entire market infrastructure, the nuts and bolts of finance, is going to deal with innovative companies that are playing in the digital asset world. This sets a pretty important precedent. When you boil it all down, the outcome is really a three-step win for just a stable, predictable market. First, MicroStrategy's classification as an operating company was confirmed. Check. Second, it reinforces this key idea that indices should just reflect reality, not make judgments. And third, and maybe this is the most important part, it means the conversation can finally shift away from these weird rule changes and back to the fundamentals, the stuff that actually matters. And you can see this perfectly in MicroStrategy's own response. It was super short, super deliberate. They didn't spike the football and yell victory for Bitcoin or anything like that. No, they framed it as a win for neutral indexing and economic reality. Basically, they said the system worked as it should. And you know what? When it comes to the plumbing of the financial markets, that's exactly what you want to hear. You want it to be predictable and, honestly, kind of boring. So where does this leave us? Well, with this huge structural shadow finally lifted, can the market now focus entirely on the company's fundamentals? Getting rid of a major distraction like this is a big deal for sure, but it also means the spotlight is now shining even brighter on their actual strategy and execution. The risk of a random, forced selling event is gone. That giant roadblock has been cleared from the path. Now it's all about the road ahead.